Hi there, this is the story of Hensoldt, ticker symbol HAG. By the way, this company has been requested by a member who has access to my portfolio, where my performance over the last 4 years has been over 30%. And by the way, in this portfolio, you can find far better investment ideas than this company. Now, the interesting thing about this business is that the price went from $10, sorry, not $10, 10 euros to over 80 in just a few years. Amazing. And the most important question for you is whether this company is still a great investment to have the same performance to the current valuation. And the answer, you will find it in this box. During this video, I'll open the box and you'll find the answer. Now, to understand my answer, you have to look at this business, what they do, why the stock price went up so much, and what's next, right? If you look at the revenue over the last 3 years and first 9 months of 2025, the revenue has increased from 1.7 billion euros to 2.2. And also they reported a nice growth rate for the first 9 months of 2025, 1.5 billion euros. And earnings, as you can see, this business reported some profits over the last 3 years, 78 million, 56, 108. And for the first 9 months of 2025, they reported a loss of 43 million. This is bad. Also, they expect for the next quarter, Q4, to report a profit. Now, if you also look at the free cash flow for the same period, a loss over $218 million. Now, why? First, what do they do? I ask a question. What do they do? Because if you look at the current market cap is over 10 billion. And revenue, let's say they might report 2 billion for this year. And if you put that into perspective, you might say it's fairly valued as long as they keep growing. But you also have to look at their balance sheet. They have 504 million in cash, debt 1.2 billion. Now, this debt can be a problem, can become a problem, especially if the earnings don't improve. Because if they no longer have earnings, positive earnings, they can no longer pay their debt. And they have to raise more money from investors, from the public market. And that can create dilution. So be aware of that risk. Now, this company they offer sensor solutions to defense sector. They have two main segments. Sensors represent 84% of the total revenue and optronics, 16% of the total revenue. And this segment is growing quite fast. Here, the growth rate is lower. For instance, they offer sensors for radar, avionics, and others. And optronics is about optical system for surveillance. And by the way, be aware that this company is from Europe, Germany. So Europe, Germany. It's important to understand that because they report this high growth rate in revenue, and that's why price went up. By that, we have to ask the question why the revenue has increased so much. Because Europe, defense spending boom. Europe has started to increase the spending for defense. And this company, Hensoldt, is from Germany, Europe, they benefited a lot. And another important indicator you have to look is the order backlog, which now is about $7 billion. And compare this order backlog, future possible revenue, with the current revenue of 2.2 billion, is quite a lot. They can easily double their revenue. And compare their order backlog with the market cap, you might see some potential, right? But here is the thing. The most important thing about this company is their final profits. And investing in Europe is quite tough. There are great companies there, but not all of them. You have to be very careful with Europe. Because if you look at their margins, they are quite low. And also this last, not sure if they can increase their profits. Yes, the revenue can grow a lot, but if they continue to report losses or low profits, that will be bad. The price won't grow that much from this level. I mean, to have another 10x is unlikely. So you have to be very careful. And also see here this dividend. They pay a dividend yield of about 0.6%. And as they don't have so far any earnings, you have to ask yourself if they can continue to pay this dividend. Because if they announce a cut in their dividend, for sure the stock price will decline from this level. So, in my view, to open the box and show you the answer, Hensoldt is not a great investment. It's not. I mean, I don't see a margin of safety, and also when you look at their profits, quite bad, plus take into account their debt. Even if their order backlog is about 7 billion, still, I wouldn't rely on this, because this is possible future revenue. But if the war in Ukraine stops, this company, the stock price of this company will go down, because it will be affected. I'm not saying that Europe will stop spending for defense, but that investment, that spending will slow down. So here you have to be very careful with this company. They already benefited from this defense spending boom. And if something happens, Europe announce slow down, something like that, or as I said, the war in Ukraine stops, this company and also the other companies will be affected. The prices will go down. So investing right now at the highest peak is quite risky. That's why, if you want better investment ideas, far better with low risk, and your return higher than this Hensoldt, simply go to my profile, press join, and choose Titan Investor. And there you have access to my portfolio, plus an investing course, custom-made videos at your request, for instance, this company Hensoldt, and bonus access to the previous levels, Spartan and Gladiator. So if you have other questions about this company, please let me know in the comments.